So I woke up a little bit early this morning and found my mind wandering towards some of the companies that I've sort of been keeping tabs on for the past couple of weeks, and in some cases, the past couple of months. Now, keeping an up-to-date watch list of stocks is really not one of my strong suits, and it's probably something that I've been neglecting for a little bit too long. For the longest time, from my viewpoint, I sort of neglected the watch list. I think because, I want to approach investing with the mindset that each new company is a new learning opportunity, and just because I don't think that the company is something that I want to invest in doesn't mean that I shouldn't spend some time to potentially try to learn something from the situation. So in reality, that gave me a bloated watch list of thousands of stocks that realistically I would never in a million years be able to cover in depth one-on-one. So now I'm going to actually dedicate some time and put in some effort to generate a watch list with companies that I think are potential good values in the future and ones that I'm interested in looking more into. So let me know in the comments below if you'd be interested in seeing a watch list of companies that I'm currently looking at, and maybe I can throw something together. But anyway, in this video, I'm going to briefly talk about 3 of the companies that are going to be near the top of my watch list. One of these companies has an extremely defensible moat and some of the most valuable IP on the planet. Another is an undervalued small cap company that has some associations to some of the investment gurus that I love. And another is a bit of a special situation. Not my typical cup of tea, but I'm very interested in looking towards it because of the potential valuation. All right, let's check out these companies. Okay, the first company I'm putting on my watch list is none other than the Walt Disney Company. I'd be shocked to learn that you have never heard of Disney before. Their IP is some of the most ubiquitous and valuable in the world. We got everything from Mickey Mouse to Star Wars owned under the Walt Disney umbrella. If we take a look at this chart, you can see some of the highest grossing franchises of all time are owned by Disney. We have near the top Mickey Mouse, Star Wars, Disney princesses, and the list goes on and on. Marvel Cinematic Universe. Basically, Disney has content that absolutely gushes cash. They have a history of creating beloved franchises, and once that asset is produced once, then they can distribute it digitally through their Disney Plus service, and of course through regular Blu-ray and DVD sales. On top of that, they have their theme parks business, which basically allows you to spend a week immersing yourself in the Disney universe, all the while spending an entire year's salary in a nice weekend. Disney's able to harness this concept of weaponized nostalgia, where they have content that, for instance, I've loved since I was a child, and I'm almost certainly going to share with my children. I don't see Disney disappearing anytime soon. The reason I'm interested in this company is because none other than Pat Dorsey invested in this company back in the second quarter of 2021. He has his US reported portfolio here, and he bought Disney at and it makes up about 9.5% of that reported portfolio. Now, I don't think that this is all of his positions, but still it's a pretty sizable piece of his portfolio. It would appear to be a high conviction bet for Dorsey. Now, Dorsey is the master of economic moats, and Disney is basically the epitome of a moat around a brand or an IP. Very few brands actually consist of a durable competitive advantage, but I think Disney is one of the select few. One great thing about this situation is that Dorsey bought it in the second quarter, so anywhere from 184 to about 169 or so. So it looks like we can actually potentially buy Disney for the same price, or maybe even a slightly better price than what Dorsey thought was an appropriate entry point for Disney. Now, while I believe Disney has a wonderful business, recently in their financials, it isn't necessarily reflected as such. So this is more a leap of faith of using Dorsey's conviction as a starting point to dig more deeply into this company. There's no question that Disney's business was hurt by the COVID-19 pandemic. So potentially there's a recovery on the way for the business, and that warrants a deeper look. So I can't answer if this price is a good entry point or not, but I'm definitely going to be doing some more digging on this company. The next company also comes from another super investor, and this time comes from Spier with the Daily Journal Corporation. Longtime Charlie Munger fans would be familiar that he is the chairman of this company, and this is one of these situations where it's not really easy to tell just by looking at the financials what's actually going on with this company and why it might be undervalued. The Daily Journal has a legacy newspaper business that isn't really a thriving business, but on the other hand, they have a software as a service platform for court management systems that is what the business is going to pretty much consist of going forward. It's a surprise to me that even though Munger is associated with this company, there's barely any coverage for it. And on top of their growing software business, they of course have the equity portfolio, which is managed by Munger. The Daily Journal has a pretty big exposure to Bank of America, Alibaba, Wells Fargo, and a few other companies, and as well as BYD in Hong Kong, which isn't listed here. There's an investor named Matthew Peterson who has done a lot of great work that I'm going to be digging into on Daily Journal, and I'll come back with another video in the future. This makes up less than 2% of Spier's portfolio, which, you know, I wouldn't call that a really high conviction bet, but he bought this back in the second quarter, so at the end of March, it was priced at about $316 per share, and all the way up until the end of June, we see somewhere in the mid 300s. So the share price, let's assume that Spier got it at about $300 per share at the lowest possible price point. It's about $40 more than that at this point. It is a small cap company. Its market cap is less than $500 million. I don't know. Again, this is on the watch list. I don't know if this is a fair price or even a deeply undervalued price for this company, but it's certainly something that I will check out. I'll leave some links to some of Matthew Peterson's research that I'm going to be looking at and basing a lot of my hunting off of, so if you want to check that out. So if you're interested in a turnaround software business that Charlie Munger is at the helm of, then definitely check out Daily Journal with me. All right, and the final idea comes from an investor named Jeremy Raper, and this company is called POSaBIT Systems. This is a guy who has done a lot of great work on Shinnikin, which is a company that Mohnish Pabrai has invested in Japan. And while he may not be a super investor, he is a full-time investor managing money, and his write-ups are usually very thoughtful and clear, so this is definitely a company that I'm going to be looking into. However, it is a little bit of a different company than what I'm used to looking at. I usually try to find companies that are wonderful for the long term, and by every metric, this is a company that is probably not one that I would want to hold forever. So right away, looking at the financials, we can see that there's a very brief operating history, and it's basically all money losing. But one of the important parts of this thesis is the growth rate of the revenue. So we've seen a doubling of the revenue from 2019 to 2020, and then again, almost a double to the trailing 12 months. So basically, this company is a provider of point of sale system that's mainly serving the cannabis industry. The thing that caught my eye most about this write-up is right at the top. He believes that it has a 3x upside, and it's a tiny company. It's $200 million in market cap. The big boys can't come and investigate this company. They can't put the money here. So even though this is a little bit of a different situation, I'm definitely going to do some digging here. But Jeremy's write-up is awesome, and I would definitely encourage you to read it if you're interested in thinking about a potential 3x or so. He gives an introduction and overview of the company, and then goes into why he thinks the company is actually a potential three-bagger at least. And as I said before, all companies are an opportunity to learn, and I believe that even just giving this one article a brief read through is going to make having this company on my watch list worth it. All right, thanks for watching. If you have any resources about any of these three companies that I've talked about in this video, please send them my way because I'd love to explore all of them further. Please like the video and subscribe to the channel if you want to stay up to date with more content like this in the future. If you like this video, you may want to check out this video over here. Otherwise, thank you so much for watching this video all the way to the end. I really appreciate your time, and I will see you in the next video.